It's been fairly quick because I think there was initially a lag. But if you look at it from the regulatory point of view, we've talked about the broader economy in the first panel, but from a regulatory point of view, I think the financial sector regulators are two, State Bank and SECP. And I think the response from the State Bank, number one in terms of priority, is to ensure there's adequate liquidity. I think there has been substantial injection of liquidity, as we've all seen through various measures. And as Ali very correctly pointed out, that it's a fine balance one has to strike. Because in a high inflationary environment, you have to be very careful about the amount of liquidity which you release and which is sustainable. State banks, I think, responsibility with, the markets work on, everybody understands, works on two bases. One, the fundamentals, the other is, the perception. Unfortunately, the perception has changed negatively, so the FX flows which are affected because of the fundamentals have deteriorated more rapidly. So central bank's response to manage the volatility, I mean, nobody should be out defending a rupee value, but manage the volatility is a primary responsibility. So I think now we're at a level which is fairly stable for now. SECP's response, I think they cannot provide liquidity to the regulators themselves, but to facilitate that. I think the response to ensure price discovery, I think that should be, that's why I did not raise my hand where Ali said about the flow. Price discovery is very, very important. There, I think there are more complex issues, so the response has not been so forthcoming, and the stock exchange's position has been maintained for now. But I think in the limited options that the government has, the regulators have, they have been really decisive. And it will have a positive impact, but all of these have a lag effect. They come with a time lag, it's not instant.
Mr. Farrukh, would you agree with this assessment, especially with regards to Pakistan's equity markets and mutual fund industry?
I mean, I basically agree with what Ali and Tawfiq have said, but I would say that yes, our economic issues are basic, they can be tackled. Pakistan's issues are, and I think have always been, really more political and social. And I think we cannot divorce those from what happens on the economic side. So yes, the economic issues and the economic problems may be very simple, but tackling them requires, as we saw in some Q&A in the last panel as well, institutional building, governance, etc., without which those very simple issues can become either unsolvable or extremely complex. To give one example, we've been obviously going through an extremely difficult economic time period, not just Pakistan, the rest of the world. And it's taken the government, you said the government's been there for 6 months to really hopefully now figure out and have a long-term constant finance minister. So when there isn't that political clarity, then simple decisions like these, when delayed, have very large impact on your real economy. I think similarly in terms of yes, both central bank as well as the SECP have responded to what at times have been very difficult choices to make, but I think the responses could have and should have come more quickly, whether it was in terms of providing liquidity through CRR, etc., reductions to the interbank market, or in terms of response to issues brewing up in the equity markets or the mutual fund industry. Specifically on the equity markets, as you may know, our stance had been that the floor should not be imposed right at the beginning, and the primary reason for that was that there was no plan in place, or there were no measures that were being thought about as to how do we take away the floor. It's very easy to impose it, but very difficult to take it away. And we have seen, and unfortunately that goes back to the institutional sort of setups. There is, whether it's lack of coordination, lack of trust, etc., between market participants, regulators, government, etc. So all the key stakeholders haven't really been able to come together and agree as to the other 3 things, 4 things that need to be done for the floor to be removed. We have seen this happening in other markets. Russia has had to, and that was in fact our recommendation to the regulator, that it will be better to close the market for 3 days. All the stakeholders sit down, figure out what needs to be happened, and then open the market so that price discovery, etc. takes place, rather than having an artificial freeze. Russia closed the market down, 2 days later, they figured out whatever needed to be happened, reopened it. Indonesia closed it down. Other markets have had to take extreme measures as well. But it's unprecedented that after 2 months, we really still don't know, whether it's the regulator, whether it's the government, whether it's the market participants, that what exactly needs to happen to take away the flow.
I'd just like to make a comment on that, and I'm the only guy that kind of raised my hand about the flow. I think the big difference between Russia, Indonesia, all the other countries that Farrukh is talking about, and Pakistan, is that these countries have huge foreign exchange reserves. Russia is sitting on something like $380 billion of exchange reserves, Indonesia on 130 billion. Our biggest problem, I think, was that if you didn't put a floor on the market, you had no idea how much of a rundown on the foreign exchange reserves would take place if foreign investors sold, let's say, 100%, which is the worst case scenario. In a situation where your reserves are already going down in such a dramatic way because there aren't corresponding inflows coming in, not imposing the floor would have, I think, had a very adverse impact on the rupee and created much more panic. And I think today, we have to manage everything simultaneously. We have to manage inflation, we have to manage interest rates, and we have to manage the exchange rate. So I think there is a very strong nexus between the logic of keeping the floor and maintaining some stability in the exchange rate. It is my opinion that if the floor was removed, maybe we would be looking at 105 or 110 rupee. And that would have had its own consequences because, as you know, these become self-fulfilling prophecies. That would have created more speculation. There would have been more capital flight. And there would have been, a lot of other negative consequences, which, thank God, we haven't faced. So there was a logic in keeping the floor. And, whether the floor remains for a week or 2 weeks or 3 weeks, in my opinion, is really not relevant. I think the government should remove the floor when they have enough reserves, through the IMF to contain the panic that may happen, should foreign investors decide lock, stock and barrel to get out. Maybe that doesn't happen. Maybe the withdrawal will only be 20%